Hi everyone and welcome to today's morning report with me, Richard Perry, market analyst at Hantec Markets for Friday the 7th of February. It's non-farm payrolls day, so that is the main thing that everyone will be looking towards today, and that is going to govern risk appetite throughout the day. Certainly what you'll often find in front of non-farm payrolls is markets get pretty flat, not major amount of movement, with a bit of caution ahead of that announcement, and then on the announcement there's a pretty volatile swings either way, depending on what the announcement is. In the last few, certainly since yesterday afternoon, risk appetite has improved somewhat. Certainly with the ECB press conference and Mario Draghi saying that the eurozone wasn't facing a deflationary situation, and also that he would not be changing monetary policy at least until March, when the next forecasts come out from the eurozone on their economic situation. So basically, the euro had a very strong move to the upside, and obviously stock markets also had a bounce as well. So that helped risk sentiment throughout the world, and we've seen some of these moves to the downside that we'd seen over the past couple of weeks retrace back overnight. So that's what we've been seeing in front of this payrolls number. But what you're likely to now see in the next few hours is markets and FX trade pretty much sideways in front of this payrolls number, due to the lack of knowledge as to exactly where this payrolls number is going to be. Obviously, last month was sharply down to 74,000, and what we're seeing, what we'd see is uncertainty in front of that number. Certainly on the until that number comes out, 185,000 is the expectation, and certainly I think anything around about 10,000 either way would probably be deemed to be fairly decent, especially considering the number last time. Anything certainly below, I think 175, maybe into the 160s, is probably going to be considered a little bit disappointing, and would be considered bad for the markets. As I said, watch out for the spikes. There does tend to be a retracement after about 10 or 15 minutes after the payrolls announcement. So watch out for that. Gives you another chance to get in and trade to the direction of the announcement. So that is this afternoon. But the chart of the day that I'm looking at is going to be this DAX chart. We've had a fairly decent recovery actually in this chart in the last day or so, and what you've seen now is a break of that downtrend that's been in place since the 23rd of January. The 55-hour moving average has actually been flanking this move, and both the downtrend and that moving average have now been breached to the upside, so that's a positive move. And I think if you look at these momentum indicators, they're all still improving. The RSI is still pushing higher. The MACD continues to move higher. It's back above that neutral line as well, which is a positive, and certainly breaking that downtrend is considered to be a positive. There is what I would probably consider to be a little bit of a pivot level around that 9368 mark. That seems to be a level within that downtrend that the sellers were using as an opportunity to get back in again. So that is a barrier to the upside at the moment, and certainly if it can move back above that 9368 resistance mark, I would start to be turning more positive on this chart now. So at the moment we're seeing a bit of consolidation in the last few minutes in early trading, but certainly the break of that downtrend I think is an interesting development on this DAX chart. Well, thank you very much, and I hope you get a chance to watch our other charts today: Euro, Dollar, Cable, Dollar, Yen, and Gold. I wish you good luck with your trading. Certainly around that non-farm payrolls figure, it could be a bit spicy, so watch out for that. And good luck, and I'll speak to you later. Thank you very much.